Bitcoin, woof, down again, over $3,000 a coin, selling around 100,000. Gold was up to $4,020 today, but flattening out as we're going on there. The markets are still open, 3,978. It has to stay above 4,000 to stay strong. I mean, again, it could go down again. Nothing goes straight up and go. We called it. We said it would go down about 500 points. It did. But it's going to go way back up. But there's corrections. Nothing goes straight up and down.
In today's news recap, silver's been included in the U.S. critical minerals list. The U.S. Department of the Interior released a list of critical minerals, adding materials such as copper, silver, and metallurgical coal to the list, thereby increasing the risk that these materials may be included in future tariff policies. The market had anticipated the inclusion of copper and coal in the critical minerals list to some extent, but the inclusion of silver has sparked widespread concern. If tariffs are imposed on silver, its liquidity could face issues again, potentially causing significant volatility in silver prices. Suki Cooper, an analyst at Standard Chartered, stated that it remains unclear whether the U.S. will impose tariffs on silver, but listing silver is the first step in this process. On the other hand, the U.S. has included certain customs codes for silver in the tariff exemption list, which may mean that specific types of silver will not be affected by tariffs. Approximately 2/3 of silver supply relies on imports, while it is one of the key materials for electronics, solar panels, and electric vehicles. The inclusion of silver on the U.S. critical minerals list will further highlight its status as a strategic mineral, potentially signaling a paradigm shift in the supply and demand dynamics of silver and ultimately its market price. Previously, due to concerns about potential tariffs on silver, large volumes of silver were preemptively transported from international markets to New York warehouses, causing a liquidity squeeze in the London silver market. This became a key factor driving silver prices to record highs in early October. As supply in the London market has increased, silver prices have consolidated over the past few weeks. However, if tariffs prompt another wave of large-scale movements, silver prices will experience significant volatility once again. In addition, silver mining companies with extensive operations in the United States and its partner countries are poised to become the primary beneficiaries of this list. Beyond the impact of tariffs, these firms will also benefit from U.S. fiscal incentives, production subsidies, and streamlined approval processes for new projects, further reducing their operational costs and enhancing profitability. Some of the froth has been blown off in a much-needed correction, Rona O'Connell, an analyst at StoneX, said in a note. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
This is how they say it in CNBC. Stocks retreated on Thursday as companies that have benefited for the artificial intelligence trade came under pressure yet again. Yeah, no shit. From eye-watering valuations. Total fucking bullshit crap. Again, we're the first to call it, but no. Now NVIDIA did. I forgot. Only what? 7 months. 10 months later. The Dow is down nearly 400 points. The S&P down 1.12%. And the NASDAQ down nearly 2%. All right? And then you go on. You go back to AI. China will win the AI race with America, NVIDIA chief says. Jensen Wang has warned China will beat U.S. in artificial intelligence race thanks to lower energy costs and looser regulations. No. That's not why. That's not why. We said why. We need more optimism, Wang said. Yep. The NVIDIA chief said the West, including US, UK, was being held back by cynicism. Total fucking bullshit. Total fucking bullshit. Oh, by the way, oil down. Yep. Down again, selling at 63.43 per barrel for Brent crude. Because there's way more supply than demand. The whole fucking world is going down. Bitcoin, poof, down again. Over $3,000 a coin, selling around 100,000. Gold was up to $4,020 today, but flattening out as we're going on there. The markets are still open, 3,978. It has to stay above 4,000 to stay strong. I mean, again, it could go down again. Nothing goes straight up and go. We called it. We said it would go down about 500 points. It did, but it's going to go way back up. But there's corrections. Nothing goes straight up and down. AI may fatally wound online advertising model, warns Berners-Lee. Sir Tim Berners. Where's this Sir Tim? Fuck this Sir shit up your fucking ass. Why these fucking names they go? Nobility, Prince, King, Sir. Fuck off with this fucking bullshit language. Warned of large language models, LLMs, might eventually replace humans in consuming the internet. Quote, if web pages are full or are all read by LLMs, then people ask LLMs for the data. It's the future. It's going to happen. It's going there. Yep. And again, you're going to see when the Dow goes down, when the NASDAQ crashes, it's going to crash around the world because they've way overinvested in Asia as well.
In today's news recap, gold stuck in a range as trade optimism and Fed signals cap upside. Gold has been stuck in a range for the past 5 days, struggling to regain momentum after falling around 10% from the record high of $4,381 reached in October. The yellow metal remains under pressure after 2 straight weeks of declines, with uncertainty over future U.S. interest rate cuts and easing trade tensions dulling its safe haven appeal. Bullion's weakness comes despite the Federal Reserve's 25 basis point rate cut last week. Fed Chair Jerome Powell's comment that further cuts were not a foregone conclusion tempered investor optimism and lifted the dollar, weighing on gold. That cautious tone, echoed by several Fed officials, has seen traders scale back bets on another rate reduction in December, leaving gold struggling for direction. The situation in gold and silver has been the classic sell the news. As we pointed out in our channel right after major media covered the rally, it's been pretty much flat, which is great for stackers to buy more. For the same exact reason, I'd be very wary of citing any bankster promoting gold and silver now, because they're the ones looking to take the other side of the trade. The outlook was further dampened by easing geopolitical tensions after U.S. President Donald Trump and Chinese President Xi Jinping pledged to reduce trade barriers during last week's meeting in Busan. While the talks stopped short of a full trade deal, the framework for tariff reductions and increased Chinese imports of American goods helped calm markets and, in turn, capped demand for gold. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
In Asia as well. What else? You ready? Household debt hits record $18.6 trillion. Younger borrowers, 18 to 29, are struggling the most with late payments. All right. Gen Z. The Gen Z revolution is going to happen. We talk about Mondani, who just won the election in New York City. Very important. Very important. We're going to go into the details in a bit. Student loan balances rose to a record 1.565 trillion. Total household debt climbed to a record 18.6 trillion. While most borrowers, young Americans are feeling the pressure. Among those aged 18 to 29, the delinquency rates 5%, more than double a year earlier and the highest of any age group. The Gen Zs are suffering. I could keep going on. We'll put more in the Trends Journal. And it's, again, the facts are all there. The growing divide between the haves and have-nots. Yep. The pattern increasingly resembles K-shaped economy in which the higher income households continue to spend and build wealth, while those with lower incomes face mounting stress. And again, as we reported, some 10% of the U.S. households are responsible for 50% of all consumer spending. All right? Rising household debt balances point to worsening K-shape. Yep. Job cuts in October hit highest level for the month in 22 years, according to Challenger and Gray. This is serious. Job cuts for the month total 153,000, a 183% surge from September and 170% higher than the same month a year ago. The Great Recession is coming. That's when it was back then in 2009, when they said it was the highest for any October since 2003 and the worst year for announcement layoffs since 2009, the Great Recession. Yep. Retail holiday hiring to hit lowest level since Great Recession. And that's according to the National Retail Federation. They said that today. Ready? Big office landlord sues its bondholders. The shift to remote work since the pandemic has prompted tenants to shrink office footage. No shit. Get ready for the banks to go bust as more defaults happen on loans. It's right in front of everybody, but nobody's talking about it other than us. And what else do we have here that's important? The kids aren't all right. This is an article from the Wall Street Journal yesterday. Tuesday. And it goes on to say that the customers, they're talking about one of the Chipotle. If their shares fell 23% last week after release of disappointing earnings, Chief Executive Scott Boatwright said customers in their late 20s and 30s facing several headwinds, including unemployment, on and on. College graduates are having trouble finding good jobs, and AI might partially be to blame. Unemployment among 20 to 24-year-olds with a bachelor's degree was the highest in more than a decade. That's other than when the COVID war was going on, all right? Again, Generation Z. Why am I saying this? Because the election on Tuesday in New York City, it's historical.
What do you think of today's show? Do you agree with Celente? Will gold consolidate around the $4,000 area for a while before shooting back up? Or on the contrary, Is the bull market over? Are you buying Bitcoin instead? Post in the comments section down below your honest opinion and share with the stackers your game plan. Thanks for watching now. Peep this video right here because you'll love it, and I'll see you on the other side.